So I'm joined by Simba Mhungu, who's Managing Director of HFG Advisory, who's with us here. Good morning.
Good morning.
Thanks for being on the programme.
My pleasure.
So you were listening to all of that, seeing some of those statistics. You talk us through why this is so important. President Xi had the opening speech in Beijing, and he was selling it hard.
It's a big deal for Africa. If you've been to any African city in the last 10 years, the skylines have changed. Africa is known to be one large Chinese construction project, and the numbers back it up. So you talked about trade of $170 billion last year. It peaked at about $220 billion a few years back, most of that driven by oil prices and prices of machinery. Africans buy machinery from China, and China buys oil. It only goes beyond that. If you look at the scale of infrastructure in Africa that's being funded, you see that China is now the single largest bilateral financer of infrastructure across the continent, bigger than everyone else combined. So it is a big deal for Africa.
It is a huge deal for Africa, and as I say, you know, President Xi bigging this up in his speech, talking about the 1.3 billion Chinese people that will work with the 1.2 billion African people in terms of building a stronger future. They talk about transport, energy, telecoms, agriculture, water, IT. Is it a win-win? What are the downsides for Africa?
So the perception, I think, overall, I think it's a win-win. Africa has won in a big way because we've got an alternative source of capital to the World Bank and to all the other institutions that just used to lend us money. But there are concerns about the size of the debt and the terms of the debt. And for any lender, they're going to have covenants or terms for whatever they extend to Africa. And it's Africa's prerogative to see whether they accept those terms or not. The amount itself, if you look at the numbers, it's not extraordinary. It's 120 to 130 billion over the last 15 to 18 years. And if you dig deeper into countries such as Ethiopia or Ghana, you'll see that Ghana has got about $4.5 billion in outstanding debt. And of that, $25 billion in outstanding debt. And of that, less than $4 billion is from China. Ethiopia has $29 billion in outstanding debt, and of that, about $12 billion is from China. So there's still some headspace as far as debt is concerned.
And also that gives China a lot of control. In the meantime, other countries are looking to Africa. You've got the United States looking to get a piece of the action. The UK, we had Theresa May there, but also other European leaders. Everybody else sees the potential, don't they?
They absolutely see the potential of vast amounts of natural resources, which China needs in large quantities. And so what they tend to do is to attach the right or the option to mine those resources in the event of default. The equipment that's going from China to Africa is largely mining equipment to get those resources back to China. So I think there are some issues around those options in terms of transparency regarding the debt covenants that cover African debt.
Very interesting. Thank you, Simba, for coming in and sharing your expertise with us this morning. And we'll look at this again in the news briefing shortly, in about 10 minutes or so, because it's all over the Chinese press. And we're looking at how they are covering this as a story in the Chinese media as well.